Starting from a cost basis of a little over $30 billion, Warren Buffett's Berkshire Hathaway now owns shares in Apple valued at over $120 billion. And that valuation comes at a time where Apple's stock is down more than 24% year to date. Apple is the company in which Buffett has made the most money ever on a single stock throughout his entire career, and it's a fantastic example of Warren Buffett buying a great business at a reasonable price, something he's spoken about for years, but in the case of Apple, it may have actually been that he bought a spectacular business at a dirt cheap price. This is the third and final part in a three-part series here on the channel looking at some of Warren Buffett's best investments ever. So if you haven't seen the previous two episodes in the series, definitely go and check those out and subscribe to the channel so that you can catch future content as well. Now, the story of Warren Buffett investing in Apple starts back in 2016, and 2016 was actually a year where there was a lot of uncertainty surrounding Apple's business. It was the first year in which iPhone units had failed to grow, and people were pretty well aware that Apple stock was actually getting really cheap in the market. It traded at a PE ratio in the mid-teens, and it had this huge pile of cash. And if you factored in that to your valuation and looked at something like an EV to EBIT multiple, it actually got into the single digits for a pretty substantial period of time, and it got as low as about 5 times EV to EBIT in 2016. It was so cheap, in fact, that even Jim Cramer knew that to be the case, and this is what he had to say on that topic.
Apple's got a huge upgrade cycle that some are predicting could drive its growth rate up 25%. Let's say that's nonsense. Let's be conservative. Let's cut it in half, 12.5%. Totally arbitrary. Where's Apple trading? It sells for just 14 times earnings. And that's before you back out the huge pile of cash on its balance sheet. So even being very cautious with the numbers, I mean, ridiculously so, right? I cut the estimates in half. Apple's going twice as fast as Clorox or Colgate. Yet its stock trades at a monster discount to their safe stocks.
But a single product, the iPhone, represented close to 70% of Apple's revenue at that time, and there was just a lot of uncertainty in general around the future of the iPhone and therefore the future of Apple. People were concerned that, was Apple going to become BlackBerry 2.0? Was the massive run-up in iPhone sales over the past few years just a fad? And sure, Apple had a really healthy balance sheet and they were sitting on a ton of cash, but they also had this weird situation where a lot of that cash was sitting in Ireland, and there were potentially some pretty major tax consequences for bringing that cash back to the US. Now, Berkshire Hathaway first started accumulating shares in Apple in the first quarter of 2016, and the reason I specifically say Berkshire Hathaway is because we now know that those very first shares weren't actually purchased by Warren Buffett. It was one of the other two money managers at Berkshire, Todd and Ted Weschler. Ted and Todd at the end of 2015 managed about $9 billion each, and in the first 2 quarters of 2016, they accumulated shares worth a market value of about $1.5 billion. So we either had one of them who put on about a 16 or 17% portfolio position in Apple, or possibly we had both of them buying a little bit, and maybe it was about an 8 or 9% position for both of them. But by the time the fourth quarter of 2016 rolled around, the buying of Apple from Berkshire Hathaway got much more material, to the point where it was certainly Warren Buffett. Ted and Todd just didn't manage enough capital to possibly buy all these shares. And Berkshire actually went on to buy Apple for the next 8 quarters straight, building a share split adjusted position of 1 billion shares by the third quarter of 2018. It was a position that had cost Berkshire a little more than $30 billion, and it represented more than 20% of their entire US equity portfolio. For sure, Apple might have been cheap at the time, looking at simple ratios like a PE or EV to EBIT, but what on earth was Warren Buffett doing buying a technology company? We know that for years Warren Buffett had talked about creative destruction in technology businesses, and that he just didn't really understand them, and he thought that, competition could spring up and make a technology business obsolete pretty quickly. But we do know one thing when it comes to Warren Buffett's circle of competence, and that is that he really understands understands consumer behavior. And both he and Charlie Munger had seen their kids and grandkids and even friends who were in their 80s at the time be completely addicted to their iPhones. There's a story that's come out recently about Sandy Gottesman, who is a longtime friend of Warren Buffett and Charlie Munger. And, apparently Sandy Gottesman one day lost his iPhone in the back of a taxi and was completely freaking out about, having lost his iPhone and not being able to track it down. And the story goes that Warren Buffett was kind of completely perplexed about why this old man was so concerned about having lost his iPhone. I mean, it's not like he couldn't afford a new one. Sandy Gottesman is a very wealthy individual. Yet Sandy Gottesman clearly felt kind of naked, like a lot of people do, to not have his iPhone on him. Now, I don't know how true that story is, but it's that type of insight that I think really got Warren Buffett across the line with Apple. And still to this day, I don't think that Warren Buffett probably sits down and watches all the minute new features released by Apple at each of their kind of, product release days, but I think he really, really did understand those consumer behavior dynamics.
Is this a boom and bust cycle, or is there something different?
Not in the least. I don't. I like to see the new release do well, or that. But I do not focus on the sales in the next quarter or the next year. I focus on the. They won't tell you exactly how many, but hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, that is some of the most valuable real estate in the world. I mean, that is. Fifth Avenue will never come close to that. I mean, it is. You've got hundreds and hundreds of millions of people with loads of buying power and able to do business or learn information or whatever it may be, and it's part of their habit of living. I mean, they spend hours a day, and it does all kinds of things for them. So that real estate is worth a fortune.
Now, the other thing that I am almost certain of that Buffett really liked about the Apple situation, besides a sticky product and a cheap price, is the capital allocation that was starting to happen at Apple. Over the past couple of years at that time, Apple had started to funnel more and more money towards shareholder returns, whether it be through dividends or share repurchases. And share repurchases definitely turned out to be the approach that Apple favored over time. And by the third quarter of 2016, Apple had completed a pretty big chunk of a huge capital return program of about $250 billion. We all know that Buffett is a huge fan of share repurchases, and for the first time we were really seeing a very material kind of catalyst with Apple for their cash not to just be sitting there on the balance sheet as, something that's worth a bit of money additional to the Apple business. We were actually starting to see that cash utilized in a very material way. So what did Warren Buffett do after accumulating that big stake in Apple over, about an 8-quarter period from late 2016? Well, the short answer is he basically did not a whole lot. He did trim the position slightly. Berkshire sold about 12% of its shares between Q4 2018 and Q4 2020 over a time where the stock price more than doubled. But outside of that, Berkshire has really just sat on their Apple position. And what's really turned this into a phenomenal investment for Warren Buffett and for Berkshire Hathaway is kind of this triple whammy of earnings growth, of a rapidly shrinking share count, and of multiple expansion, people just paying more for every dollar of earnings that Apple produces over time. It turned out that some of the market's concerns about peak iPhone back in 2015 and 2016 were actually valid. 2015 was actually the year in which Apple sold its most iPhones ever, but Apple continued to grow in other ways. They demonstrated pricing power with their iPhone. They simply jacked the price up over time, and the revenue from iPhone has continued to grow. And Apple also continued to grow other parts of their business, quite high margin areas in particular, like services. And it's kind of like this razorblade model. Buffett has actually been invested in a big way in a razor company before, being Gillette, I believe in the 1980s and 90s. And the whole razorblade business model is basically you sell a razor very cheap, and then you sell a razor blade with very high margins. And you may even take a loss on the razor, but you kind of get this recurring, really high margin revenue from continuing to sell the blades. And Apple was kind of doing the same thing here with the iPhone. iPhone. They were selling the actual iPhone unit itself, but they could continue to sell to their customers in other ways through things like cloud services, like Apple Music, or like through the App Store. And it was actually significantly better than the razorblade model because Apple wasn't losing money on selling an iPhone like a razorblade model typically would. They were actually making money from both of those different aspects of the business. So to walk you through that triple whammy of earnings, a shrinking share count, and multiple expansion in the market, this is what some of the numbers look like. Now, in the 12-month period ended September 2016, Apple had earnings of $45.7 billion. Now, for the trailing 12 months, as of recording this video, that net income has more than doubled to $99.6 billion, about 2.2x growth in total earnings. Keeping in mind that Apple did a 4-for-1 stock split back in 2020. The split adjusted share count over that same period of time from September 2016 through to today has gone from 22 billion shares outstanding to 16.45 billion shares outstanding. To flip that in a slightly different way, it basically means that the per share ownership in Apple for each individual share that Buffett owns has gone up 33.7%. And to cap it all off, the market has grown far more fond of Apple over time. Buffett accumulated shares in Apple over, a couple of year period. He probably averaged somewhere in kind of the mid-teens sort of PE ratio. And as of recording this video, the PE for Apple is about 28. So you really had sort of these three engines of return all working harmoniously together for Apple. You had the earnings grow about 2.2 times, you had your per share ownership grow about 1.3 times, and you had multiple expansion or a higher PE of about 1.9 times. So 2.2 times 1.3 times 1.9 is basically equals multi-bagger, and it's been more than a 5x return if you kind of combine all those figures together. And also, did I mention that Buffett has also been receiving about $700 or $800 million a year in dividend payments on top of that? It's just been a super successful investment. He put a massive amount of Berkshire's capital to work, and it's produced literally like $100 billion in gains for Berkshire shareholders. It's just been spectacular in my view, although he's had stocks that have been, multi-baggers of a larger extent than that. He's had, 10x's and 20x's and stuff before. To me, the really impressive part is that he just did it with so much money, and he did it right out where everyone could see him with basically the largest stock in the world. So without doubt, in my view, his best investment of all time. So looking at the Apple position for Berkshire Hathaway today, it now represents about 40% of the US equity portfolio, and it remains a great business. It still produces a high return on equity, it has great margins, it has pricing power, but unfortunately for Buffett, it's probably not as attractive an investment moving forward. It's no longer as cheap as it was, which also makes the future buybacks less effective than they were a few years back, and Apple no longer has this kind of latent cash pile sitting there like they did when Buffett first got involved. But nonetheless, Buffett clearly still likes it. He's actually added in a very small way a couple of times to the position as recently as 2022. And he's written about it in his recent annual letters as one of Berkshire's four giants alongside wholly owned subsidiaries like Berkshire Hathaway Energy and Burlington Northern Santa Fe. I think to a very large extent, Buffett will probably treat this investment like he has done with Coca-Cola over the past several decades, where it kind of just sits in Berkshire forever and continues to steadily compound, but time will tell exactly how that plays out. So that is some of the story and the numbers behind what in my view is Buffett's best investment ever. Just an absolute massive swing at a company that was really staring everyone in the face, which is Apple, and it remains a huge position for him today. So if you enjoyed this video and want to see future content here on the channel, be sure to subscribe so that you can see those videos as soon as they are released. But that's it from me for this one, and I'll see you in the next video. Cheers.